The beleaguered Indian real estate sector seems to be finding its feet after a long and very dry spell. Low home loan interest rates and discounted prices are piquing consumer interest, while the reopening of offices and an overall revival of business activity is aiding a revival in the office and commercial real estate market. The partial return of migrant construction labour has also led to a pickup in launches by developers. These signs of recovery in the sector coincide with the overall recovery in macroeconomic indicators. Remember, auto sales, freight revenue, power consumption have recovered smartly in the period leading up to the middle of October, while the manufacturing PMI is at a multi-month high. My colleague Mugdha Warrior is on ground in Bangalore, where real estate sales have reached nearly 70% of pre-COVID levels. She speaks to buyers and developers to get a sense of where the market is headed. Take a look.
"35-year-old Bengaluru-based IT professional Roshan Krishnan believes the time is ripe to buy a house. And industry analysts echo this argument, citing that property prices have fallen, there's ready inventory, and home loan rates are at multi-year lows.
I was looking for a place in North Bangalore. What prompted me was really the payment plan Puravankara had to offer, because it's a project that's just launched. There's a lot of flexibility in the payment that I could make. The other thing I looked at is the home loan rates at the moment. The current rates are quite attractive, and if this would be the right time, I think, for anybody to invest if you're planning a home loan. I was honestly pleasantly surprised once I heard what the rate was. Yeah, it was 6.9, 7 something.
First time I purchased a house, the loan rate interest was 17%. Wow. It was in 97, that's my first house.
While the Krishnans decided to make a site visit to look at the property that they're buying, many potential buyers have not been able to make such visits due to the pandemic. One such strategy adopted by several builders is to go fully digital for bookings, and one such player is Puravankara. In fact, this festive season, Puravankara is launching a virtual home expo where customers can have the entire end-to-end process of looking for properties and making the purchase completely online.
You used to go grocery shopping, now you just pick up your app, you look at your big basket, or you pick up Amazon, and you just shop online. It's becoming as convenient as that. We've never imagined this shift. We did 3 launches. We launched our online booking platform, and all our launches saw significant traction, and 70% of our bookings in that quarter happened online without customer ever visiting the site. We have dropped our marketing cost because originally we were looking at far higher marketing cost compared to what we are doing now, because all the investment is on digital, and physical meetings and physical presentations and events has come down significantly.
Demand has been gradually picking up in the last couple of months. The July to September quarter has seen housing sales hit 65% of pre-COVID levels. But this year, as the festive season sets in, property consultancy firm Anarock says it expects sales in the top 7 cities to cumulatively jump 35% over the September quarter. That's in contrast to the usual 5 to 10% jump quarter-on-quarter seen in previous years. Bangalore and the Mumbai metropolitan region are expected to lead the surge in sales, with the national capital region, Pune, Chennai and Hyderabad expected to report sales spike of over 20% each. But here's an interesting trend. While a fall in property prices is being seen as a driving factor, Knight Frank says Bengaluru and Hyderabad have actually seen residential prices rise in the third quarter of this year over last year. Developers attribute this to the IT sector's fortunes.
80% of the Bangalore residential real estate market depends on the IT and IT-enabled services. And we know during the pandemic, one of the sectors which has performed well was the IT sector. And due to this, the demand has been very robust. Considering the last quarter which has been done well, so this festive season is going to be extremely good. The reason for the same is the market, there is a renewed demand for the residential real estate, one. And second, there is an all-time low interest rate.
This festive season, the real estate industry expects many millennials to pick up keys for their first homes, for several NRIs to set up base here, and for many in the workforce to buy larger houses away from the central business districts. Well, here's hoping the festive cheer stays on. In Bangalore, Mugdha Warrior.
Well, that certainly is the hope. Are we on the cusp of a real estate revival? Niranjan Hiranandani, the co-founder and managing director of the Hiranandani Group, with us. Anshuman Magazine, the chairman and CEO of CBRE South Asia, also on the show. Pavitra Shankar, the ED of Brigade Enterprises, joining us as well. Pavitra, gentlemen, thanks very much for joining us here on the program. Mr. Hiranandani, let me start by asking you, are we on the cusp of a revival? This has been a sector that's been beleaguered for several years now on the back of decade-low interest rates, on the back of the fact that we've got property prices across several cities also easing a tad. Are we seeing a revival in sentiment?
Shireen, 100% there is a revival. But you know, you have caught me on the wrong foot simply because in January or February you had asked me the same question, and then we had the pandemic in March. So we're just hoping that there is no other setback that has taken place. Like in the last 3 years, we've had demonetization, RERA, insolvency law, GST. All this affected our industry extremely negatively. Today, the signals are very positive. You have just made the statements correctly. Namely, interest rates have fallen down. People are looking at better quality of flats, larger sizes of flats. The last notification come from the Reserve Bank of India has definitely helped that even for larger loans, the interest rates are now coming down. So that's made a world of a difference for people who want to upgrade the size of their flats also. And at the end of the day, a large amount of flats which were ready are definitely going a-begging in the sense that people are wanting it quickly, closing transactions, and home loans are being issued very fast. So I think a combination of all this is seeing a huge pickup in the marketplace. In the Mumbai region too, we do get much higher sales than what we have had. I would say that it is equivalent to last year's, if not a little higher than an equal time in the last year during the festival season. So we are back, but whether this is going to be sustainable or not, time will tell, and hopefully no other setbacks in the near future.
Yes, we do hope that there is no future setback. But let me take that point across to Anshuman Magazine. Anshuman, Mr. Hiranandani spoke about the many setbacks that this sector has had to face in the last few years. But given where things currently stand, and we listed out a whole bunch of the positives in favor of the sector. In fact, today the IBA chairman, Mr. Rajkiran Rai, here on CNBC-TV18, made it very clear that the feedback from bankers is that the home loan category is seeing a big takeoff in demand. So do you believe that this is here to stay? It's sustainable, the resurgence that we're seeing?
First of all, it is certainly a revival. Second is what Mr. Hiranandani mentioned as setbacks. Hopefully they'll turn into positive. RERA is something which, of course, has its challenges, but also gives confidence to consumers to buy property. I think besides lower interest rates, tax benefits, RERA actually is also, which doesn't get enough credit, reason why consumers are buying it, because now they feel more protected that if they buy a property, they will get a delivery, and if they don't, they have a recourse. So some of those negatives are turning positive. And certainly from last month, especially from month of September, things have started to generally pick up. And I think the reason, of course, is that the impact of lockdown opening up is what we are seeing now. Which you know, like you mentioned, labor is coming back. And also in India, we have not seen as much job losses at the middle to upper level as we have seen in some of the other countries I see. And yes, there have been salary reductions, etc. But generally speaking, the job losses have not been huge. So that is helping. And there is also inventory, which is there, which is completed at a lower price. So all this put together is, has increased the velocity of sales, and there is much better activity than we had seen the first 2 quarters this year. Now, will it sustain? Sorry, go ahead.
Now, I was just asking you if you could quantify. You said that it is better in comparison to the previous year, especially the festive season. That is what Mr. Hiranandani was speaking about as well. Can you quantify for us? How much better is it year on year?
Frankly, I don't have the numbers offhand, but the fact is, what I was mentioning, not previous year, I was talking about previous 2 quarters, and it is. I see it is better, but frankly, I don't have the exact percentages. I can't think, but we are seeing in affordable category the sales of residential properties from end users primarily reviving. In fact, there's a uptake depending in some markets more than others, but overall, certainly that revival process started. Just to quickly answer your question, will it sustain? I think for the time being, it will sustain because there is still a gap. So I do see this going forward in the next few months to continue. Of course, nobody can predict the sort of COVID-19 is still hanging on our neck. But leaving aside, I think this is there will be momentum going forward.
Okay, you expect the momentum to continue to build. Pavitra, let me ask you about what the experience is on the ground in terms of getting inventory out in the market, new launches, pricing. What are you picking up on today?
Yeah, I would definitely like to echo the sentiments made by the earlier speakers. We've had a very good Q2. In fact, month on month since April even, our residential business has just been increasing month on month. And as a result, our Q2 numbers actually at pre-COVID levels. In fact, slightly better than what we did in Q2 of the same or in Q2 of last year. So what we're typically seeing is that the customers, they're typically the end users who are coming back to the market. I think a lot of the demand that came through in Q2 is pent-up demand that just didn't come through in the Q1. Confidence levels are back. Definitely the home loan interest rate being low is encouraging people to get off the fence and go ahead and make their decision. And I think many of these customers have just been waiting on the sidelines. There have been so many shocks to the real estate industry and talk about pricing getting lower, etc. Well, frankly, in markets, especially in southern markets like Bangalore, Chennai, Hyderabad, there isn't really room to move any lower. We've talked immensely about the margins on which real estate developers play in this market. So I think prices have been stabilizing. And in fact, in some of our own projects, depending on the micro market and so on, we've been able to sustain price increases over the last couple of months. And we hope to continue to do that. In terms of new launches, we had actually been a little cautious during Q1, but subsequently we launched new phases in our existing integrated townships. And we are actually planning a new launch in Hyderabad, for which we are very excited, since that is a new market for us. Although we have had a residential project there, but one will sort of hit the market at the sweet spot and is in the mid-segment category. So we are very confident that this will actually be well taken up in Hyderabad. And Chennai also has done very well for us during Q2, which is actually a big plus point. Typically, people don't expect that.
Well, that is certainly what the numbers indicate as well. The southern markets have done well. But Mr. Hiranandani, let me come back to you now, sir, and ask you a quick question as far as the unsold inventory is concerned, because that was a legacy issue that the real estate sector has been coping with. Given where things currently stand, what is the current situation? And also, that fund, the corpus that had been set aside by the government to try and aid stuck projects. From an RTI that was filed by a colleague of mine at CNBC-TV18, our understanding is that it's barely taken off. So can you update us on both unsold inventory as well as stuck projects?
So the good news is that a large amount of unsold inventory, which was ready, is definitely getting sold. So that's a plus point because people don't have to pay GST. And I forgot to mention to you about the stamp duty rates in Maharashtra coming down by 3%. So from 5%, it is down to 2%. And that has caused a huge boost in terms of inventory sales, especially the ready stock. So with a ready product, you don't pay GST in ready product. So you're saving 5% there, plus you're saving 3% in terms of stamp duty. So that comes to 8%. And any lowering in prices already having taken place, as was just mentioned, all that gives a huge benefit and a fillip to the sale. The second part, which has really made a big difference, is the fact that those who are looking only for rental are now also looking up for ownership because they've had some problems, or at least some of them had problems with tenancies where the societies were creating a lot of problem when parents came in or brothers, sisters walked into the building. Because they were not owning the apartments, there was a lot of issues, at least in the Mumbai region, among cooperative societies. So people are encouraged to get it. As far as the Swami Fund is concerned, yes, it appears to have been a slow start, but a sure start. My reading is slightly different, that the requirement of this fund is much more. The 25,000 crores being set aside, I believe a very small amount has been dispersed as of now. Close to 8,000 crores is what I believe is committed, but and a long way to go. But in reality, much more money is required. So we will require at least 4 funds more of the size of Swami Fund in order to see that all the struck projects all over the country actually come to the completion. And that is what we have represented both to the Finance Minister and to the Governor, Reserve Bank of India, to see that further funds should come in, where we don't need government money, but we actually require a similar facility has been given to Swami funds in terms of the first right. So I think we are looking at a positive part of this story, though I agree with you that this has been a slower start than I imagined would take place.
Yes, and I would imagine that we would have seen a faster start to this fund and its takeoff. But perhaps, as you mentioned, we could maybe see more measures being announced by the government as part of the next set of stimulus measures. But we'll just have to wait it out to find out more about that. But Anshuman Magazine, how broad-based is this recovery? Pavitra was talking, and Mr. Hiranandani talking about affordable housing. What about the luxury part of the housing market? And more importantly, what about commercial real estate, office spaces, because that was the side of the market that had held up even though the residential market had virtually collapsed. So are we seeing a faster pickup there as well?
Sure. Just very quickly on the Swami Fund, what I know there's not full information on this, but what I believe is 21 projects have been approved. About 12,000 crores of funds have been also approved. But where the slowness is, and this is a question, in fact, I'd asked earlier this morning, and I have to still get the answer, is what is the actual amount which has been dispersed? But I know that 21 have been approved, and now that money is starting to come up. And I agree with Mr. Hiranandani that the 25, actually it's 12,000 crores, and then I guess can level up to 25,000 crores may not be enough, but at least a good start, and that money is hopefully will start trickling soon. Coming to a question on how broad-based it is. See, as far as residential concerned, no doubt, most of the sales are happening in mid-market or affordable, whichever you want to define. On the higher end, there is the sales are much, for obvious reasons, slower. But the fact is that even if we sustain the affordable category, that will keep the momentum in the residential sector. Coming to the office sector, interestingly, we are starting to see, since last month, activity improve. Overall, there has been a decline in office space take-up. We'll know by end of this year. I expect maybe around 30% plus, because we still have 3 months left, and a lot of the office space take-up happens in last quarter. But anytime around 30+%, there could be reduction over the previous year. However, I do see what you call again activity improving in 21 going forward. We will see an improvement over 20, and the main reason for that is that India is an established offshoring center, and we are already seeing, especially in the US, which is those American multinationals are the largest occupiers of office space in India, because they need to cut costs because of COVID-19. They're going to offshore more in India, and this is not theory. This is actually in practice is already happening. And the good part also is that a lot of these companies were outsourced even to Eastern Europe. I believe they realize that even Eastern Europe is becoming quite expensive. They're looking at India more seriously. In the last few months, I've seen more discussions happening in the US forums, different business forums, looking at India more because India is cost competitive and has the manpower. So I expect the office market to pick up. And the last two other sectors which are actually showing quite of activity is the logistics side of the market. We have seen a tremendous increase in the last 2 months in the logistics side. So I would say logistics, data center to some extent, and office is going to start picking up after a decline.
Okay, so you expect a pickup in the office space takeoff as well. Pavitra Shankar, I'll give you the final say. You talked about some new launches that you are going to be focusing on. What is the challenge today? Is labor constrained, or has that now been largely addressed?
Actually, that's been mostly sorted through. Most of our construction sites are 90 to 100% back in terms of the strength of manpower required. I don't see that as a challenge. We don't have issues with supply of materials. I actually think there's a lot of promise in the sector for those who have the ability to stick on, especially in the residential sector. COVID-19 has been known to just accelerate existing trends. And even prior to the whole pandemic, there was a trend of consolidation within the real estate sector. So I think amongst the residential players as well, we are seeing this. A large proportion of the increase in volume for some of the more established players, I think, is driven by this. And that will only continue as this has sort of showed that it is important to stick with a developer who will come through, who will deliver on time and with the quality promised. And those are the ones who are able to sort of have the financial withstanding to give flexible payment offers or whatever it might be that the customer needs to have the confidence to go ahead.
Yes.
So I think it's really important for those who wish to stay in the game to sort of, play a conservative and play a safe game, especially with finances where that is concerned. And that just sort of means to approach the market with the right kind of product, right design, and price it such that it moves, but you also get the required margins to stay in business. So I think all of us are focusing on growth, but it has to be margin-led growth, and it can't be entirely top-line driven. So at least for us at Brigade, this is something that is of utmost importance for us today, because we intend to continue to try and deliver these kinds of numbers and grow the market share as a result.
Oh, absolutely. I would imagine that your investors are also going to be looking at the margin picture very closely. And of course, the hope is that this is going to be sustainable. This is not just pent-up demand, but this will, in fact, lead to a revival of the residential real estate market, which has been in the doldrums for a long time. Niranjan Hiranandani, Anshuman Magazine, Pavitra Shankar, many thanks for joining us here on this edition of Restarting India. Thanks very much for your time. We'll take a break. There's a lot more coming up. Don't go anywhere. We're back in a moment.